All right, we're good to go. Sorry, guys, had to have my team get in here, help me get the camera on. All right, we're back in business, guys. We're good to go. Sorry, guys, had to have my team get in. All right, audio check is all good as well. All right, guys, we're ready to roll. Hey, guys, hope you're doing well. Knocking off a little rust. Wasn't feeling well Thursday morning, and then progressively as the day went on, started feeling worse, and had to take it easy Friday and Saturday. Well, as easy as you can take it when you run a business. So saying that to say, guys, community is probably the first time you're hearing from me since Thursday. Apologize for not being on live trading Friday. Was expecting to feel better by Friday, ended up feeling worse. So I had to have my man Tommy take over. So with that in mind, guys, we're back to business here for the new week. Feeling much better, ready to take on the new week, see what opportunities we have, and it'll be lovely as always. Unicorn Queen, good evening, happy Sunday. Silver Bullet Trader, hello, hello. George, hello, Jeffrey, Cleo, glad to have you guys. Kevin, happy Sunday, Dylan, and everyone here. Thanks in advance for the knowledge and insights. Hey, glad to have you, Kevin. Appreciate you joining us. Michael, Joe, Frank, glad to have you guys. Ed, hello. Eslam, welcome back. Ahmed, great to be back. Glad to have you guys. Omar, happy Sunday. Good to see you. It's good to be here, guys. Reaper, hello. Adrian, hey, guys. Hope we're all doing well. I saw someone commending Unicorn Queen for sharing her analysis in the Discord, documenting her trading journey, the good, the bad, the ugly. And like I think I've mentioned that either last week or the week before, right? Immense respect for that. To be someone that's able to share what you're doing and share both sides of it, right? Everyone's excited to share their wins, and that's easy to do. But what you don't see from most people is their losing trades, how they handle drawdown, how you even manage a losing day, right? And in my opinion, it's such a disservice to most traders because most traders never see that side of trading. They have no idea how to handle a losing day, no idea how to handle a losing week. And it shows because most of the time we just blow up. So when I see people that have the courage to show both sides of the coin, what it looks like when you're doing good, what it looks like when we're going into a little bit of drawdown, right? And how do you fix that? How do you come back from that? Huge respect for that. I know it's not easy to do. And for those of you guys that are able to do it, everyone benefits from it. Everyone in the community is able to see what you're doing, learn from what you're doing, and get insight. So really do appreciate that. Big shout out to Unicorn there. And I just saw someone giving you props. I'm not sure where the message is at. I can't find it, but I saw someone giving you props for it, and it's well deserved. Daniel, glad you're feeling better. Appreciate that. Thank you very much. Hakuna Matata from Kenya. Shout out to all the folks from Kenya. Got quite a few of them. Ian, hello. TM, hey, all excited for the new week. We are as well. With that, guys, I've been working like a dog here today, so I'm going to keep this one short and sweet. May take a few questions that I like, but probably won't get to very many here today. So going to go ahead and keep things moving forward on my end. Like I said, not feeling well and having to catch up on work and projects that I've been working on that wasn't able to do as much of Thursday and Friday. So let's go ahead and get into the business. One thing I did want to cover is I had a red week yesterday in my AMP Live account. So one of the things that you guys may or may not know is what I've been able to do with this skill set of trading. And now that many of you guys know I'm a full-time trader, is I've learned that with one skill set, I'm able to create multiple income streams from it. So what I've been able to do is have two different live accounts, one for long-term growth, which is my AMP Live account. And then I have my TradeStation account, which I use to pay the trader every month. What does that mean? Rent, bills, food, maid, entertainment, right? All those things are covered by my TradeStation account. Prop firms is something I do on the side to create an additional income stream. So think about that. One skill set, 3 income streams. You're able to do that once you have this skill set, and that is something I do. One of the reasons why I like it is because naturally I'm a risk-averse person. If I had all my eggs in one basket in one account, that would be a bit more stressful for me to make my living as a full-time day trader. However, by having multiple accounts, by having multiple streams of income, by having risk diversified, I'm able to sleep easy at night, pay the trader on some accounts. Maybe one week I don't do that great in one account. But what I do make sure to do is keep my risk managed. I keep the losing week small and easy to come back from. That's why I live trade. That's why I do things the way I do in mentorship and community, because that's something that all traders need to see. If you're being coached, mentored, and someone's showing you how to get profitability and find your way in these markets, and they're not showing you how to manage drawdown, how to manage losing trades, then they're doing you a huge disservice. Because then when you're hit with that situation, you're going to crumble under pressure because you have no idea how to handle it. So one of the things I want to share with you guys is I did end up closing the week red. I took no trades on Friday. One of the things I've learned is if I'm sick, if I'm not feeling well, the worst thing to do is trade. And here's why. When we're not feeling well, when we're sick, we want to go into the markets and do what? Feel better, right? We want that feel good. Well, man, I feel like shit today, but man, if I win a trade, this will make my day feel better. This will make me, feel a little better than I am now. But the problem with that is when you go into the market with the wrong intentions, it will show you that. So what I've learned when I go into the market trying to feel better, when I go in, or maybe I'm having a bad day with something else, right? It's not health related. And you know what? Let me just win this trade. It'll make me feel better. I've had a tough day, but if I win this trade here in the afternoon, I'll feel better moving forward. And whenever we go into the market for that, what ends up happening? We're going into it with the wrong reasons. We're not going into the market to manage risk, to follow the model, to focus on long-term profitability. We're going in there to take a hit and get some dopamine, right? And if you treat the market like a drug and you go in there and you use it for excitement, that's all the wrong things. So I saw something I really like this weekend where you have to have things you're doing outside of trading that bring you enjoyment and bring you satisfaction. Because if it's just the markets, it will absolutely punish you. Because what I've learned, and I've learned this through experience, I'm sick, not feeling well, go into the markets, try to make myself feel better, and then I take a losing trade. I'm already in a bad state, right? My mind's not as sharp as it should be. And now I'm feeling worse because I just took a loss. And then what do? Try to go in there and fix it. You fix it, and then you end up bringing more drawdown into the account. And now you're feeling 10 times worse than before you even opened your laptop. And on top of it, guess what? Now you're sick. So I don't know who needed to hear that, but if any of you guys do run into that situation, be sure to manage it well. I've learned it the hard way, and that's why, again, on Friday, wasn't trading, kept it real light on my end for that reason. So whenever you guys encounter that, keep that in mind that I told you how to handle it. Don't get sick. Don't end up trying to make yourself feel better and dig yourself into a worse hole and regret even opening up your laptop to begin with. With that, guys, that's everything I had to share. Let's go ahead and get into the business here. All right, weekly chart for US dollar. Reasonable to have a retracement, right? We've seen a monster run higher recently, all the way up into the 110s, all the way down here from the 101s when we were looking for higher prices. We repriced most of this imbalance, and then we created a swing high on the weekly chart. It's reasonable to see it retrace. The market ended up retracing down into this weekly fair value gap here in this last down close candle. So that's a bullish order block. I want to go and extend that through. So we traded down into the bullish order block in that weekly fair value gap. What I'm going to be watching here going forward longer term is how we trade inside this key level. That's going to give me insight as to whether we're going to continue long-term bullish, or if we lose this level, that's giving me separate insight, right? So like I always tell you guys, it's never really a matter of being right or being wrong. It's a matter of having key levels that you're looking for, letting the market tell you what it's going to do at those levels, and then using that insight to make informed decisions, right? So if we turn bullish from here, great. If we melt through it, no skin off my back, that'll give me new insight moving into the new week. So that's what I'm looking at here in this critical level, and now we'll refine this down into our daily time frame. So daily chart, we have a dealing range here, this low to this high. Again, why this low? This low takes out sell side, this high takes out buy side, and then we create a swing high and pull back down into the range. So this is our dealing range from this low to this high. I was looking for this sell side liquidity here this week. That was what I was expecting. Once we broke down, right, we got a decisive breakdown here going into this week, and then that gave me the insight I needed to look for these equal lows here and this inefficiency. One of the reasons why I also like these equal lows is you'll notice here's equilibrium. So below equilibrium is what? A discount market. So we have these equal lows, the sell side liquidity in a discount market. This thick line, sorry, is the weekly fair value gap. Sorry, still getting my head together. Not as sharp as I usually am. Let me get the weekly fair value gap on here. I want you guys to be able to see that in the lower time frame. And let's make it, I'll make it black. So what I'm watching in this discount market, right, below equilibrium, is how we trade below the sell side and inside this weekly gap, right? So if we're going to be bullish, it'll be the same exact thing that we're looking for here, right? So for those of you guys that have already been with us for this year, you guys already know it's like clockwork, right? Same thing here. We had a dealing range, same criteria from high to low. Market drops down into a discount market. If it's bullish, it's only going to do a few things, guys, right? Drops down, takes out sell side, internal range liquidity to external, and then we're looking for higher prices beyond. So again, it's the same drill, right? Markets do the same thing all the time. Once you learn it, you never need to learn it again. From this low to this high, we have a discount market here. Markets traded in that. What I want to see from here, if we are to remain bullish, would be a quick rejection and leaving discount market quickly. That's a signature I like to see. That's something I called live for you guys here, and you guys see how that plays out. Right, so again, I'm looking for the same things. When you look for something that's consistent, it repeats every single week. So now that we're here in a discount market inside that weekly gap, right, which is the gray rectangle I have there, I'm going to see how we trade there, and that's going to give me insight longer term. If we're going to be bullish, the market's going to show me. Right? If it's going to be bearish and we start melting through these levels, then that's going to give me additional insight, and then that'll change my long-term perspective on US dollar. Dropping down into the 4-hour chart, we can see all these smooth lows here, right? So the way I like to look at the market is who's been making money and where would their logical stop loss be? What's the market been doing? Higher. The market created this intermediate term high here. Why is this an intermediate term high? Because we have an intermediate term low, or sorry, because we have an intermediate term high that's lower to the left and to the right of it. So short-term high here and here, and then we have a short-term high that's higher than that. So that's going to be classified as an intermediate term high. When I see that and then we break down, that allows me to then see longer-term projections for where we should trade to. So once I saw the market structure rotating lower, we broke down, we shifted market structure here. We got below this fair value gap, used it as resistance, all insight that the market is bearish. That then took my attention to the lows. So again, now that we're trading at these lows down here, I want to see, do we reject the sell side and continue to trade higher? And that'll give me the insight I need for, again, my longer term macro perspective on the US dollar. As always, transitioning into the bond market, I'm going to be confirming that with treasuries. So what I'm still seeing in treasuries is still heaviness. So I'm still looking for lower treasuries, which is going to support a higher dollar. So what I do many times when I'm looking at dollar and I'm relating it to treasuries, unicorn, are intermediate term highs and lows the same thing as long-term highs and lows? No, they're two very different. Long-term highs and lows are actually much more significant than intermediate term highs and lows. When I get to the analysis for NASDAQ, I'll get into that and I'll refine and touch on the difference between intermediate term and long term and how you can use that to frame long term price swings in the market. I'll get into that in NASDAQ. I was looking forward to sharing that with you guys here today. So as I was saying, when I'm looking at the US dollar, I'm confirming the price swings in dollar with bonds. So for example, we've seen dollar drop into a discount. If dollar is dropping, right, and this is a real drop that's going to be sustained, then what do we want to see in the treasury market? Treasury should also be rallying aggressively, right? And that would confirm that this drop is a real drop as opposed to a suspect drop that's likely going to reverse. So looking at the bond market, what we were watching last week here was this up close candle because we want to see if that would be treated as a bearish order block. We see it's respecting it. So the fact that we weren't able to see continued strength on the treasury market indicates that that is a suspect drop in the US dollar. And all that means is the drop to continue, right? It's just a suspect drop to get people short, stop anyone out that's long, and then resume a new price leg higher. The way I confirm stop hunts and a real market structure shift is with intermarket analysis. So as of right now, as long as treasuries remain heavy, I'm not looking at this as a breakdown to continue lower. I'm looking at it as a drop to reaccumulate and continue trading higher. And again, confirming that with the treasury market. Dropping down into the daily time frame. What I'll be watching is this most recent up close candle. So the Tuesday up close candle that we created, I'm going to be watching that going into the new week. If we use that as resistance and rotate lower, then that'll give me confidence looking for lower prices on treasuries, which will support the bias and what I'm expecting in US dollar, right? But if we do trade higher and we want to clean out these equal highs, then that would allow me to pivot on dollar and potentially look for a further decline. So those are the factors I'm going to be monitoring here going into the new week. 4-hour time frame. We can see we traded up into that weekly bearish order block and then we broke down. This is a market structure break here. So what I would be looking for this week, as long as you remain below this up close candle in here, would be a market maker sell model, right? So the market to break down and attack these equal lows and resume its longer term trajectory to the downside. All right, that's the business for bonds. All right, let's get into NASDAQ. Like I said, looking to keep this one short and sweet here today. So weekly chart for NQ. That's good. Move this down here. We had a bullish week last week, which was in line with our expectations. I was looking for a higher stock index futures, and that was even supported by a lower dollar. So we had open low inside that order block and then shooting higher. What I expect for this coming week will be another bullish weekly candle aiming for this swing high here. Again, just because I'm aiming for this swing high, that does not mean I need all that range to deliver, right? A weekly bias is simply to frame your trades in the direction of higher time frame institutional order flow. It doesn't mean every session is going to be bullish, and it doesn't mean that every draw on liquidity on the weekly chart is going to be traded to. It simply means that's the direction you're favoring. And you're going to see how in the lower time frame, a weekly bias that was bullish was absolutely money last week. But one of the things I do want to mention, it's all about probabilities. I had all my targets. Every day I went down, into live trading, or I was trading for myself. Every single one of my targets were delivered. However, the way the morning session delivered didn't allow me to profit, right? So I want you to think about that for a moment. I was right in my analysis, everything dead on, but I wasn't able to capitalize on it because of how the day delivered. Again, reinforcing, trading is a probabilities game. You can have the right analysis. You can know exactly where it's going to go and even what day it's going to get there. But if the day turns into high resistance, or if it has deep retracements or manual intervention, that's not going to allow you to profit. But again, if trading is a probabilities game and I'm taking the next 100 trades in line with high probability, what's that going to do for my long-term success? I'm going to be profitable at the end of the month, at the end of the year, right? Which is the goal, long-term mindset. So how do you align your trades with high probability? Focus on your higher time frames. It doesn't mean it's a guarantee, just like I showed you this week, right? Even I had the right targets, the right bias, even the right session it was going to deliver. But the way it delivered didn't allow me to profit on one of my accounts. So that's something that is very sobering for people. It was for me when I first learned it, because when I was first learning, I just thought, shit, mods get really good at reading price action, and then I don't have to worry about this risk management stuff. And man, was I wrong, right? Risk management is always number one, no matter how good you get in trading. All right, let's work down into that daily chart. So daily chart here, we got two of our targets delivered. They stopped just short of this high here. So that indicates to me they're likely going to want to use that going into the new week. So we had this high here that we were aiming for last week. They took that out. And then this high here, they stopped short of that. Right? But again, as long as you were aiming for that, you were in line with what the market was delivering, which was bullish up close candles. So now that we have a breaker here and a fair value gap, I'm going to be watching how we trade into that. So what I'd like to see going into this week, like I said, I'll have to see how Monday trades, but I would like to see a low of the week at time, like Tuesday, maybe going into Wednesday, inside this key level. And then I'm going to study the market structure at that time to see if it gives me insights that support a low of the week and then continuing to trade higher. I don't want to see us lose this fair value gap here. If we lose this fair value gap to the downside, then that makes me neutral, and then I'll have to adjust and pivot as I get new information. But what I'm looking for right now is a drop down, low of the week inside the breaker and fair value gap, clean up these equal highs here, and then take us into all-time highs for NASDAQ. Touching on S&P real quick. S&P is much stronger than NASDAQ. It's actually fell just a few points short of this all-time high. So I suspect continued bullishness for NASDAQ and S&P. And now that we're about to be at all-time high territory, you guys know what that means. Trust buy models until they fail. All right, let's drop down into the hourly chart. So I particularly liked how on 2 time frames they left equal highs. On the daily chart, you'll see they left this high relatively equal to this one. And then zooming into the hourly chart, they also left these equal highs and dropped it off. So what I'll be looking is for this as a target, but we need to see how we trade going into the week, right? So what I'd prefer to see would be the market drop, give a Judas or a fake move, and then rally higher after that low of the week is priced in. So you guys know what levels I'll be looking for that low of the week to be priced in, and then what I'm going to be doing with that information and how I'm framing my intraday trades. So one thing I said I would cover, so those are my targets, that's the bias, that's what I'm looking for. That's also what would invalidate my bias. Also like to give you guys that as well, because it's also good to be able to pivot and be flexible with what you're looking for. Going into the hourly chart here, I wanted to touch on market structure. All right, so let's take a look at this. This here would be a long-term low. And one thing I want to reemphasize to you guys is this is something we use real time. I know you're probably used to seeing, and I saw this a lot before, which is people just sounding smart with market structure after the fact. However, what I'm going to give you is how to look at market structure and how to use it in an actionable way. And this is something my man Tommy actually called this week and used to call higher prices on the hourly chart, which was this being a significant intermediate term low here. And I'm going to tell you guys how characterizing this low as an intermediate term low, how that was impactful for anticipating higher prices the remainder of the week. But let's start with this example here first. First of all, what is a intermediate term low? And this is going to be the foundations for institutional market structure, right? So this is something that will be really helpful for you to understand market structure. All right, so an intermediate term low is a low that has a short-term low that's higher than it to the left and to the right. Now, what is a long-term low? Just like an intermediate term low has a short-term low that's higher than it to the left and the right, a long-term low is going to have an intermediate term low that's higher than it to the left and to the right of it. Very simple. Intermediate term low, long-term low. Now, how's this helpful in our analysis, right? Okay, I can see what you're doing with that. I can see how to classify it, but how do we use that in our analysis? Well, if you can start to frame out long-term lows, long-term highs, intermediate term lows, intermediate term highs, it's going to give you prognostication to look for longer-term price swings. Let me show you what I mean. What do we have here? This is an intermediate term low, right? And then what do we have here? Another intermediate term low. Why? This is an intermediate term low because there's a short-term low to the left and a short-term low to the right. Intermediate. Why is this an intermediate term low? Because this low here has a short-term low to the left and a short-term low to the right. So if this is an intermediate term low and this is an intermediate term low, what does this make this low here? A long-term low. So if you frame this market structure, look at what a protracted move we got from this long-term low up to this high here. And that's based off framing it in market structure. So once you start seeing this market structure form, you can start running projections and see larger price swings before they form, as opposed to after the fact. So let me show you another example of how we use this week. And this is something that Tommy was sharing in the market analysis chat. What do we have here? Intermediate term low. And then if you factor in price with time, with this, it just takes it to another level, right? We're bullish last week. If we're bullish last week, what do we want to see? A low of the week priced in, and then the market rally from that. What time do we look for the low of the week to be priced in? Monday, Tuesday. So they drop it. They make a key low. This is an intermediate term low. I mean, you could classify this technically as a long-term low, but just for the sake of keeping it simple, intermediate term low because there's a short-term low to the left and to the right. Once you see that market structure building, you can anticipate a longer-term price run into the highs. So it's really helpful. And again, this works on all time frames, but especially for daily and hourly charts, it's really helpful in framing longer-term price legs because you're able to sort out the market structure. Right now, if you start backtesting that, you'll see, look at how they rounded it out here. Intermediate term high, short-term high here, and here, long-term price swing, right? Same thing here, short-term high, intermediate term high, long-term price swing. So it's really helpful when you're looking at longer-term analysis. Many times I use the hourly time frame to frame my bias for intraday trading, right? So if I'm bullish on the hourly chart, well, then what do I want to focus my 1 minute and my 5 minute entries on? Obviously, in line with that daily and hourly chart. And that's a way we frame market structure to know what we're looking for. The other reason market structure and classifying it in this way is helpful, because if this is an intermediate term low here, intermediate term low here, and here, what does that also mean about these swing points? They should not be violated. And if they are, that is a market structure break as opposed to a market structure shift. So that's all I'm going to give you guys here on YouTube. I could be here all day talking about swing points, how to classify them, how they're helpful. But just a general introduction, since I was getting some questions, figured I'd go ahead and clarify it for you guys. Hope this one was insightful. That's all I have here today. Not going to, let me see. Yeah, I'm not gonna touch on too many markets here today. Keep things light. Let me see what we got. I will touch on some commodities. So soybeans, very interested in looking for higher prices long term here on soybeans. And then if you apply market structure, like I showed you, a whole new world opens up to you. So looking for long term higher prices on soybeans, wheat. I'll have to see how we trade inside this gap, but especially corn. Corn extremely bullish. Soybeans looking for continued bullishness as well. And then watching the sugar markets down here. We took out this key low here. And if we start to get displacement higher, then these can give long-term trades that you can get in and hold for weeks. So that's what I'm looking at in the commodity markets. For crude oil, and I usually touch on crude. Let me go and touch on that for you guys. So we've had a monster run higher up into the 79s. Fell just short of my target at the 80s. So what I'm going to be watching here for crude oil traders, check out this weekly fair value gap here. Monitor how we trade there, and that's going to give you insight for what we're looking at going into this week. I would not want to see us lose this down close candle if we're going to remain bullish long term on crude oil. So that's what I'm looking at. Of course, I'll monitor that within the lower time frames, but those are the markets I'm focused on this week and for the next couple months, looking for some good opportunities to form here going forward. Alrighty. Any questions for me, folks? That's all I had. That's all I'm planning on sharing today. I still got some other things I got to get sorted out here today. So let me see what you guys have anything for me. And good to hear you're better, Dylan. Much appreciated. Unicorn Queen, thanks, Dylan. I appreciate you as well. Awesome. Hey, y'all excited for the new week? Absolutely. Jang, definitely needed to hear that. Man, if that helps one person, it was worth taking the first 2 minutes to talk about that. As far as like the health and understanding how to manage that in your trading, right? Because as a trader, you have to take on a lot of responsibility, right? There's no boss saying, you better get your ass in here or else, right? It's you being disciplined, you taking self-control, self-responsibility. And it's not easy, right? A lot of people need that external person to tell them, do this, do this. If not, you're fired or you're not getting your paycheck. In trading, it's all on you to be disciplined and to be responsible for your own actions. So those are things I have to learn, and that's why I like to pass it on here to you guys that are on the same journey. Unicorn Queen, same here. Timing was off on some trades. Yeah, difficult week, especially for the AM session. Wednesday, Thursday, and Friday. Pretty difficult price delivery. Of course, opportunities, but not easy, clean, low resistance trading for the most part from what I was seeing. Omar, intermediate term low, I learned from ICT that it can also be created. I see your point, Omar, but let's go ahead and take that one step further, right? If a swing point is rebalancing an inefficiency or a fair value gap, right? Let me go and show you. Right, so this could be an intermediate term low, you're saying, because it's also rebalancing a gap. What's a gap in the lower time frame? What's a fair value gap on the lower time frame? A fair value gap is a swing low on the lower time frame. So the reason why he said if you're looking at those time frames and it rebalances a fair value gap, that's also considered an intermediate term structure point, because if you understand the fractal nature of what a fair value gap is, it's a run on liquidity in the lower time frame. So it goes right back to what I said, that it's an intermediate term low to the left and to the right of it. Thanks for adding that. Alessandro, what dealing range would you consider for NASDAQ? The one that you can see on the 4-hour or the one formed on the 1-hour? How do you select the most relevant? Thanks in advance. Phenomenal question. So when you're looking at dealing ranges, the most important thing is to anchor it to the time frame you're analyzing, right? So for example, let me go to US dollar. US dollar is an example I'm looking at, right? So this dealing range here is the dealing range on the daily chart. But as soon as I go up to the weekly chart, now we're trading in a different range. We're trading inside this larger range. So the key is to look at it on the time frame that you're analyzing. So let me go to your question on NASDAQ. So you're looking at the difference between the 4-hour and the 1-hour. Yeah. So the way you select the most relevant is it depends on the time frame you're analyzing, right? Like for example, the 1-minute dealing range is going to be a different range than the daily or the 4-hour dealing range. So because I don't have a screenshot, it really helps me answer questions if I have a screenshot and I can look at what you're looking at and potentially help you refine that. But the best way I can help you here with just based off your question is understanding that you have to anchor it to the time frame you're looking at, right? So for example, if I'm looking at the daily chart, well, then I'm looking at this range from this high to this low. I'm not saying I'm calling for a discount here. I'm just saying if I'm looking at the range on the daily, this is it right here. But now if I'm looking at the range on an hourly chart, well, then I'm probably just going to measure this run here to this high here. And that's what I'll be looking for at the range on the hourly chart, right? So it just is really a matter of looking at one time frame you're analyzing and having very specific rules. Like when I'm teaching dealing ranges, it's very specific. It's a high that's taking out liquidity, a low that's taking out liquidity. Also, if you can anchor it to the most energetic run, like why this one and why not this one? I like this one here because it's where the energetic run started. So I'm preferably going to use this one here. So there's a few specific rules I use, but it does keep me measuring these ranges in a consistent way. Hopefully that's helpful. That's as good as I can bridge the gap if I don't have examples to work with and coach you off of. James, true ICT mentorship 2022. Yes, sir. Yes, sir. I think, yeah, episode 13. Yeah. Intermediate term low was a huge light bulb moment there. Awesome. Love to see that. Love to see that. I know it's a great feeling. Daniel, could price range at equilibrium for dollar? Then can we expect? Strachan, can you take a look at the Dow? Yeah, let me take a look at the Dow for you. Dow's the same thing as indices, or as the other two indices. Sorry. Extremely bullish, looking for all-time highs. I like how we. Let's look at this on a 3-day chart. 2-day. Okay, perfect. So what I really like to see was this range here, which could be looked at as a bearish breaker. If we're bullish, we don't expect this to act as a bearish breaker. We want to see it get through it, get above it, and it'll act as a reclaim the bullish order block. But not going to get into all those details here. But I do like to see how we're trading through this breaker, right? Because for example, if a breaker is violated or a fair value gap in a breaker, whatever key level you're measuring, that's giving you insight, right? So for example, my man Tommy, he'll share, hey, I'm looking for this 5-minute breaker and fair value gap, and I want to see how we trade there. Well, that's giving us insight for the session, because if we rip through that, are we bullish? Probably not, right? So same thing here, right? If we're looking for this breaker to give us insight that it's going to be bearish, but we're just ripping right through it, that's giving us insight that we're bullish. So that's why I use these levels. That's why I use them to frame my bias. So the fact that we're trading through that is extremely bullish for my analysis. So now refining it to the daily chart, I even further like to see all the imbalances we're creating. And in my opinion, we're going to look to get into all-time highs with the Dow. And same thing I'm looking for in NASDAQ and S&P. Good price range. Daniel, I'm not sure I'm following your question, sir. Could price range at equilibrium for dollar? When can we expect a range in price? Yeah, I'm not following that question, my man. All right, I'm seeing a lot of questions add up. All right, let me see. How'd you start being a full-time trader? Great question. I'm going to give you the short and sweet version here. In university, could see things were changing, jobs farther and fewer in between. The advice we got when we were young of go to school, work hard, get a degree, and you're magically going to have a job that's going to keep you comfortable until you retire at 65 years old. That reality doesn't really exist anymore, right? And I've seen from a lot of my experience from peers, colleagues, they studied hard in college, and now they're unemployed and have nothing else to do. So why do I say that? Because I was able to see the writing on the wall years ago. So I recognized, oh shit, I need to figure something out, and it needs to be on my own steam. Because one, I don't like to live that life. I like to be in control, be my own boss, do what it is I want to do. And that's personally a lifestyle that suits me. When I was also able to see that, man, stuff's going to get really hard in the economy. Jobs are going to be farther and fewer in between. A degree doesn't separate you at all anymore because everybody has a degree. I was able to see the writing on the wall, and I said, you know what? I got to find my own path. I got to carve out my own income. That's what set me on fire to learn this and learn it quick. And then from there, I started trading, getting consistent, lost lots of money in the beginning. And then from there, I started getting consistent. Once I was able to do that, I completely transitioned over to full-time trading. And once I was able to make my own income and was able to get consistent with it. From there, I then moved myself to a country where very comfortable, very easy to make ends meet, and life is absolutely beautiful. Long story short, that's how we're here. Great question, my man. Dustin, thank you, Dylan. My pleasure. Could you check out Rubber? That is a new one. I wouldn't even know the ticker for Rubber. I'm sure it's a let me see. Yeah, I'm not sure. I'm not sure how to look at that one for you, my man. Abraham, I know you're in the Discord community for free though. Go ahead and send the ticker into the Discord main chat. Either myself or my team will share some analysis of what we're looking at on Rubber. If my man Tommy's giving analysis, trust it's just as good as mine. George, can you give us an example of the silver bullet in the PM session? I would love to, George, but that would take me a little bit of time, my man. Here's what I'll recommend, though. When you're trading the PM session, all the silver bullet is just a fair value gap to the drawn liquidity, right? So where's the market drawing to? How do we determine that for the PM session? You want to have your lunch highs, your lunch lows, and then you want to look back 2 to 3 days and look at all the session liquidity that there is. The previous day's Asian session, the Asian session for that day, the previous day's PM session, the previous day's AM session. Because when the algorithm's determining which liquidity it's going to run to, it's time-based, and it's running to the session liquidity that it's looking back on. So for PM session trading, those are the things I'm measuring, and then I have to determine which one is it drawing to. Read institutional order flow top down, frame a lower time frame entry with a fair value gap, and that's the silver bullet for the PM session. Do you think we'll see all-time high on gold for this week? Gold strong. Gold strong. Gold is bullish. Yes, sir. So I suspect we'll likely see all-time highs on gold. Yeah. As long as you remain above this up close here. I like how he dropped down into it, use it as support. Really nice. And as long as you remain above that, I am looking for all-time highs on gold. Absolutely. Thanks for the info. Yeah, my pleasure. Absolutely. Appreciate you guys joining. Ali had a losing week too. It's all part of the process. Absolutely. Losing is a part of trading. It's all in how you manage it though. If you know how to manage your losing weeks, your losing days very well, being profitable at the end of the month, at the end of the year is inevitable. But you have to have a model, know what you're doing, and know how to manage risk very, very well. Ahmed, AM session was not easy this week. Yeah, absolutely. Absolutely. Lunch and PM was better. No doubt. No doubt, my man. Reaper ICT had a lecture about midnight range. What's your thoughts about that? Do you agree every session have that first half-hour range logic? Absolutely. Absolutely. It's coded in the price delivery, and that's why the midnight opening price is so influential. But then when you factor in what he's sharing with the opening range, it just gives you a whole nother level of precision. Absolutely. RJ, thanks, Dylan. Hope you feel better. Appreciate you, my man. Thank you very much. Cyclops, thanks for the insight, Dylan. Give the stream a like, everyone. My absolute pleasure. Look at the German 40. We're bullish. I think I looked at this market not too long ago. This thing's just ripping higher. Yeah, so we're looking for much, much, much higher prices on this market. It's at all-time highs. So since that's the case, you want to use buy models, or trust buy models rather. And then what do we use for fib projections? Anchor it to an intermediate term low, intermediate term high. I've already showed you guys how to classify those swing points. And that's the swing points I'm anchoring my fib projections to. So when I'm looking at fib projections, I want to see intermediate term swing points that are significant. And those are the ranges I'm going to run extensions on. So that's what you can do for upside targets. Since we're at all-time highs in this market, just continue looking for all-time highs. Thank you. Nothing new about your mentorship. Oh, absolutely. My team and I are grinding away at it every single day. There will be an announcement in our Discord today I have my team working on. And we're going to send you guys an announcement where we're at. I've been getting tons of questions about how to get into the community, how to work with us in mentorship, and how we can help you evolve your trading and help you reach your trading goals. And that's absolutely something we're working on. And that I will have an announcement in the Discord by tonight, letting you guys know where we're at with that. Things are getting solidified. But again, it's something that we're taking very serious. We're putting a lot of work into, myself and my team, and we want to make sure it's absolutely perfect. Haven't had mentorship open for months. And one of the reasons being is because I want to make sure everything is exactly how I want it. And like I tell you guys, right, myself, my team, we're real traders, right? We're not dependent on making a new offer every single week, getting people into mentorship because we need your money to pay our bills, right? We want to help you guys. We're willing to help you guys, but we're not rushing the process. We're doing everything the right way. And we will have news and an announcement within the next few days. There will definitely be an announcement today, but when that'll be done, likely in the next week or so. All right, folks. As much as I love you guys, I wish I could stay here answering your questions all day. I'm running on fumes right now, as you can already tell, getting a little tired. Still got to power on through. Got some things to take care of here before I get done with my day. Sundays are the day I plan business, and I get ready here for the new week. So I'm going to go ahead and wrap that up. As much as I want to get to the rest of your guys' questions, I'm not able to. Really appreciate you guys joining us. I'll see you guys next Sunday. Take care. See you guys on the next one. Appreciate you joining us, guys.